What's going on, guys? My name is Richard and welcome back to another video. Today we're going to be talking about Spotify technology, which is ticker symbol SPOT, and this is my stock of the week. One of my followers on Twitter actually requested that I talk about this stock, and if you have any ideas for next week, let me know down below in the comment section. In this video, we'll talk about the fundamentals in Marketsmith, the earnings and sales growth, the fund ownership, the IBD ratings, and we'll also talk about the technicals. So we'll really dive deep into this breakout that it had and the indicators that could have tipped you off that it was ready for a move just like this. And speaking a little bit in general about Spotify as a company, they basically provide a music streaming platform that is very popular with millennials, college students, and myself, I'm very familiar with its product. I use it every single day to listen to music, podcasts, create playlists. It's super easy to use, and frankly, I'm not surprised at all that they've increased from 109.18 all the way to 271 in a matter of months. And this breakout actually coincided with some positive news about the company. So Joe Rogan announced that he'd be signing an exclusive deal with Spotify. And also, I think Kim Kardashian, there's rumors that she also will be creating a podcast that'll be exclusive to this platform. So that kind of fits with the N in Can Slim. We're looking for new products, new services, and that kind of explains the hype and also this huge breakout that it just had, which we'll analyze in depth in this video. But before we get into that, let's talk about the fundamentals and the actual numbers for Spotify. So first things first, I always take a look at the earnings and sales reports going back the past 3 quarters, and overall it is pretty lackluster from Spotify. It wasn't profitable the last 2 quarters, but it is posting steady revenue growth at about 20% going back the past 4 quarters. But overall, you can see it wasn't profitable last quarter. Sales growth was only 20%, but it did have positive after-tax margins. And looking at the annual EPS numbers, you can see it's not supposed to be profitable within the next couple of years. The overall EPS rating is a 29, the group RS is an A+, the SMR rating is a D, accumulation distribution is an A+, and the overall composite rating is a strong 94. Looking at the fund ownership, which is very important in my mind, you can see a nice increasing trend from about 350 2 years ago to now almost 700. So that's a big jump and is a huge positive for me when taking a look at this company. And you can also see that there's 4 high-quality funds investing into Spotify, which is a huge bonus as well. So overall, taking a look at the earnings and sales and IBD ratings, it doesn't paint the greatest picture for Spotify, but what really stands out for me is the institutional accumulation and the accumulation distribution rating. And in the end, price performance is really what matters. You've got an RS rating of 97 and an RS line going into new high ground last week, and really strong price performance overall since this March bottom, increasing from 109.18 to now 271.49. And in the end, price is what matters, price is what pays. So that is the number one thing above all else. And in this video, I really want to dive deep into this breakout because I think it's a very teachable moment because there are some clear signs of accumulation and supply drying up before it broke out up 12% on the 18th. So to really dive deep into that, let's head over to TC2000 and talk about this breakout. And actually, before we analyze the breakout on multiple timeframes, I do want to put it all into perspective and talk about the weekly chart because it's important to keep in mind the overall price pattern of these growth stocks. So overall, it IPO'd in 2018, so it's a recent IPO. That's great to see. There's more room for growth in these recent IPOs. It had its initial advance phase, set its IPO price right here, which is the green line, at 198.99. Then it had its long-term due diligence phase, and then just recently formed a constructive price pattern and looked ready to break out above this green line. So knowing this overall trend, you could have been ready a few weeks ago when it seemed ready to finally break above that green line. And knowing that, you would have gone to a daily chart and looked for a potential entry within this consolidation. So let's go back in time right here. And at this point, it's moved up. It's extended from the double bottom base, but you can see the huge volume coming in. So signs of institutional accumulation, and it's right near a green line entry. So at this point, I'd be looking for a breakout through this line on above average volume. But it starts to consolidate, and you can see moving forward, you have a nice reversal on this day, signs of accumulation once again. Then you've got another reversal, but not quite as strong. It's not quite ready yet. Then more consolidation. It's pulled back to the 10 EMA here. Nothing worrying so far. It's still just forming this consolidation pattern. Then it starts moving up a little bit, bouncing off that 10 EMA. it has a stochastic cross, but not the strongest day. It didn't finish right near the high, but it is something to keep in mind that it could start moving up and potentially break out through this green line here. Then moving forward, you can see it has a very strong day, finishing right near the high of the trading range, and this could actually be an entry because it's on higher volume than the previous day, and you have a short-term stochastic cross. But obviously, it's not the true breakout, and going forward, it falls on the next day on about equal volume, but overall, nothing crazy. It still is above that 10 EMA and is above this higher low right here. So we keep going, and it consolidates once more. Then it has a nice reversal and recovers that 10 EMA. Then it has another stochastic cross, so this is a potential entry. And then going forward, it actually has a green dot, so a longer term stochastic cross. And for me, this would be a potential setup, but it doesn't have the strongest closing range, but this is on higher volume, which is a positive. However, this entry would have failed going to the next day, where it tries to break out, meets some sellers up here, and falls on heavy volume, which kind of nullifies the green dot setup for me. And going forward, you can see that this action kind of broadcasts the next day, where we also have a drop down, a gap down actually, and a finish near the lows on heavy volume. So at this point, I'm looking for it to recover above this high and move up and break out once again. And going forward, it consolidates still above that 21 EMA, which is critical for those growth stocks. And then moving forward, you can see it recovers that 21 EMA, has a nice closing range, and once again, a short-term stochastic cross. And moving forward, it has a consolidation day, still holding above that 10 EMA now. And then it actually has the breakout with a green dot, so a longer-term stochastic cross, finishing above the pivot at 196.75, and the green line set all the way back in 2018. So this would be the true breakout entry, and you can see it has a nice closing range right near the top of the bar, and huge volume coming in. This is a sign that this could go much higher if this action continues. And then we have the breakout day, so this would be an earlier entry, and then this day it was up 12.74%, so a nice gain right off the bat. And then you have a couple days up in a row, which is a sign that this will be a successful position. And then we go to the current day, and overall a gain of 30% in a matter of days. So going through that day by day, you probably would have been stopped out if you entered on this green dot on this day, but you can see how these stochastic cross kind of help you identify that short-term momentum. And I also want to go to a 65-minute chart on this day because it was really clear that institutions were starting to send in their orders at this breakout. So let's go to that chart and let's scroll back to that breakout day. So you can see clearly that there's huge volume coming in. It closed right near the top, and it was really in this last 65 minutes where most of the progress was made, and that's when the true breakout happened. And this volume is much higher than any of the previous volume spikes within this space, and you can see clearly when institutions are sending in their orders. So having seen this, you could have been ready if you didn't quite catch this breakout for the next day when it increased 12%. But overall, that's pretty much it. That is my analysis of Spotify. I hope you guys found that kind of day-by-day breakdown helpful, as well as going intraday on that breakout day. And let me know your thoughts down below in the comment section. Remember to leave a like down below if you enjoyed the video, and I'll see you guys in future videos.